Silver is falling, and that is precisely why it matters right now. Most investors only like silver when it's going up. They only understand it after the move has already happened, at the peak. But silver does not reward emotional investors. It rewards cyclical thinkers. What you're seeing is not a price chart in the traditional sense. It is something far more revealing. It is a decadal performance comparison index to zero, showing how silver behaves inside cycles, not across headlines. And if you understand this chart, the current drop in silver prices stop looking like weakness. And this chart is indexed at 0% at the start of each decade. This means that every line starts from the same baseline. Along the bottom, you see year in decades, 0 to 10. And this basically gives you quite a bit of information. Information that is crucial for you to truly understand this market. Might not be the most obvious thing, but look at it carefully. Years and decades at the bottom, 0 to 10, and cumulative return, 0 to 600. What is it telling you? We are here in the black line. The black line is us. The 20s is the yellow line, the red is the 2000, and the blue is the 1970s. So this means that every line starts from the same baseline. Absolute price levels are irrelevant. What matters is trajectory, speed, and volatility. So each colored line represents a different silver cycle. The blue is 1970, the red is 2000, the gold is 2010, and the black is 2020. This is not about will silver go up tomorrow. It's about where we are in the cycle. So the most important feature that you need to understand, focus now your attention on something critical. Notice that every historical cycle shows long period of sideways movement, shallow drawdown, and investor boredom before a violent vertical repricing phase. Silver does not grind higher like equities. It compresses, then it explodes. Look at it. Nothing, 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 something. Look at the black line. Look at the blue line, right? Look at the red line. Nothing happens and something happens. In the 70s line, looks dormant, then suddenly it accelerates, then overshoots violently. The 2000 line, multiple fake starts, deep drawdowns, followed by sharp upside bursts. And the 2010s, that cycle teaches humility. One massive spike followed by a decade of disappointment. That decade scared investors, which brings it up to today. You are here, right? Look at the black line. The label reads, you are here, plus 511%, although we've dropped. And now, crucially, silver has pulled back. Here's a mistake most people make. They see a drop and assume the thesis is broken, the cycle is over, the trade has failed, but cycles do not move in straight lines. The question is not why is silver down? The question is this drawdown consistent with prior mid-cycle pauses, or does it violate the structure? This is not the end of a mania. This is a reset inside a broader regime shift. So this chart is not promising upside. It is warning you about timing risk. The biggest mistake investors make is anchoring the recent price action. This chart forces you to anchor to structure instead. And structurally, the cycle is not resolved. So here's the takeaway. Silver is falling, but it's not falling. The investors who win this cycle will not be the loudest. They will be the most confident. They will be the most patient because cycles do not care about narratives. They care about time.